Hey everyone, welcome back to Corporate Decoder. Today, Agree Realty Corp just filed a current report, and I'm seeing some interesting numbers about their share count. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced how many shares were out there for the last quarter, and it gives us a peek into their share structure. So, Agree Realty Corporation, a real estate investment trust that focuses on retail properties, put out some information about its outstanding shares for the periods ending the 30th of June 2026. This is important because the number of shares a company has out can affect things like its stock price and earnings per share. Let's dive into the numbers they reported. For the 3 months ending June 2026, the weighted average number of common shares outstanding was about 120.2 million. After taking out some unvested restricted shares, which were around 207,000, the number used for basic earnings per share calculations came down slightly to approximately 119.9 million shares. Now, this is where it gets a bit more interesting for potential shareholders. The company also accounts for things that could dilute the value of existing shares, like stock options or future share issuances. Under effective dilutive securities, we see several items for share-based compensation. They added about 161,000 shares for the 3-month period. Then there are forward equity offerings, like the ATM forward equity offerings and the April 2025 forward equity offering. These represent shares that the company has agreed to sell or has sold in the future. When you add these potential shares to the basic share count, the weighted average number of common shares outstanding used in diluted earnings per share jumps up to about 120.5 million for the 3 months ending June 2026. They also mention operating partnership units or OP units, which can be converted into common stock. Adding these in, the total weighted average number of common shares and OP units outstanding used in diluted earnings per share for the same period is about 120.8 million. The company specifically states that the forward equity offerings alone added about 328,000 incremental shares to the diluted earnings per share calculation for the 3-month period. This is a notable increase, about 0.27% of the basic shares outstanding. Looking at the 6-month period, the numbers are very similar, with the weighted average diluted shares standing at around 120.4 million, and the total including OP units at nearly 120.8 million. The forward equity offerings added around 363,000 incremental shares for the 6-month period. This kind of dilutive effect is common as companies use equity to fund growth or for other strategic purposes. For investors, it means that future earnings might be spread across a larger number of shares, potentially impacting the earnings per share figure. It's important to keep an eye on these figures to understand the full picture of equity dilution. Now, looking at the broader context for Agree Realty, the company's preferred stock with a ticker like ADBRA has been in the news. There are ETFs investing in it, and some financial analysis suggests that while preferred stock might seem safe, there can be better offers out there. This filing focuses on the common shares, but it's good to remember the entire capital structure of the company. Their P/E ratio is around 9.6, which is generally considered on the lower side, and the stock price has been trading in a fairly tight range. The company has a relatively small number of employees, about 90, which is typical for a real estate investment trust. My take on this filing is that it provides clarity on the company's share structure and the impact of potential dilution, while the actual numbers are not drastically different between the 3 and 6. Month periods, the forward equity offerings are a key point to watch. They represent a commitment to issue more shares in the future. For investors, this means understanding how much that potential future equity issuance could dilute their stake and impact earnings per se. The risk I'm watching is how these forward offerings are utilized and if they translate into significant future growth to offset the dilution. What I'm actually looking for is clear communication from the company on how these future share issuances will be deployed to maximize shareholder value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. Stay decoded. If you found this analysis helpful, please like this video and subscribe for more. Join our Discord community linked below.